to the races.
Cool.
Welcome back, everybody, to another episode of Fintech Fridays. I'm on the fly moving my camera, so that's always good for the ratings. I'm Brian View, President, Chief Operating Officer at FinLocker, and really excited to have Mo Oursler join us. Mo, we're going to talk about kind of your mortgage career exchange that's been launched. But before we do that, I thought maybe we could just have you introduce yourself to the audience for those that don't know you, kind of give your background, and then we'll dive into the great things you guys are doing with the mortgage career exchange.
Yeah, no, happy to. And thanks for having me on. Really excited to chat for a little bit. My name is Mo. I've been in mortgage now a little bit over 10 years. Kind of funny story I tell. I studied finance in undergrad. So I was in school in 2009 to 2012. So I was studying for 4 years about, how messed up the housing industry was. And then I graduated and was hired by a mortgage company. I spent 10 plus years at New Day USA, top VA lender, and, was blessed with a ton of leadership opportunities, learned a lot about the industry, bounced around and kind of got my hands dirty in pretty much every facet of the business. And I've just become really passionate about housing and mortgage finance and, putting people in homes and keeping people in homes. So over the last couple of years was really focused on our engagement with the Mortgage Bankers Association and education and training for the team internally. And, so I just something I've become really passionate about, and I'm excited for this next opportunity and project that we're working on. So
I think some of the audience is kind of in my kind of boat where, and you're in the same boat, frankly. You're kind of leaving, I'll call it the cushy corporate world and kind of going into the world of a startup. And your startup's a little bit different than maybe my startup and some of the other, startups. But how do you make that kind of transition mentally, right? Because I think there's all kinds of different pieces of that transition puzzle. But one big one is that mental transition where you leave New Day, where, I'm sure when you were there, you complained that you didn't have enough resources, but compared to what you have now, it's probably night and day, right? How does that process work as you kind of transition from corporate into a startup?
Yeah, it's a lot to unpack. It's certainly a different approach from a career standpoint. I think when I looked at my time at New Day, I really enjoyed some of the projects that I had that were, a blank canvas. Hey, here's what we're thinking. Here's very little to run with, but we want you to kind of build it and see what you come up with, and we'll have some input. But this is kind of your baby, and want to see what you come out with. And so I kind of had I've heard the term intrapreneurship thrown around, so I had a little bit of experience with that and really a lot of experience with that at New Day. And so I found myself really enjoying getting my hands dirty and kind of building things from scratch and being able to say, hey, we built that and we created that from nothing. And are there a lot of speed bumps and difficulties with starting something new? Absolutely. But if you enjoy the process and the challenge, then I think it pays dividends.
Love it. So let's talk a little bit about the problem that you saw and that what you're seeking to address. Kind of, I think it's pretty evident, at least one side of the problem right now. But maybe let's start there, because that's, the startup world is built around solving problems, and yours is no different, right?
Yeah. I mean, in mortgage, there's always been this boom or bust hiring problem and staffing problem where, depending on the cycle that we're in, you either have, companies that can't hire enough people to support the demand. I mean, you saw this during COVID in 2020 to 2022, and you had people getting, offered these crazy, unsustainable signing bonuses and salaries, and everyone kind of knew what was going to happen on the flip side, but most people knew, and some were comfortable with it, and some, a little bit unknowingly were kind of walking into a trap. But you have that one side of the spectrum, and then here we are a couple of years later, and you're kind of on the other side of the spectrum. I think I recently heard there's estimated to be 40 to 50,000 mortgage professionals out of work right now over the last couple of years, and there are companies that are hiring right now, but if you're a company that is hiring right now, you post one of those jobs, you're getting 2,000 applications within 3 days. It's impossible to vet those out, those job applications and resumes. So even the companies that are hiring, knowing that there's a lot of really good talent on the sidelines, they still struggle trying to find the right people to fill those roles, because for those companies, it actually is a really good time right now to kind of build your bench and improve the strength of the company. And for the people on the sidelines, it's the same thing. You're fighting over so few jobs right now that it's difficult. So we just saw that there was, the classic, there's got to be a better way. And there really does. I mean, there's no reason that there can't be some ways to smooth that out. We're not going to come in and say we're creating more jobs or, we're creating more people when there's a boom, but we think there's a more efficient way that companies can engage with people and people can find jobs that fit them and make it more centralized around mortgage and finance, that it can be a win-win on both sides.
Yeah, I think our the mortgage industry, our industry, right, is definitely unique in that there is a steady state, right? Call it the purchase business, and that's people are always going to buy and sell homes. That's going to move within a range that's somewhat dependent on an external force like rates. But there's that other part of the business, which is the boom and bust. When rates collapse, exponentially, we're in a massive boom because we have this other side of the business, the refinance business, that you can't really plan for. I mean, it's hard to plan for. So and I think you referenced this. I think the savvy mortgage operators understand they expand and then they contract, and right, wrong, or indifferent, that's their model. That's what they've always done, and they live by that. The individual, the person who is enticed by a significant signing bonus isn't typically thinking beyond the signing bonus on what happens on the other side of this when rates collapse or go the other way. Typically it's, in my experience, I ran a big lending shop. When you're reducing costs, it's a lot easier to put in a rank order, highest paid to lowest paid, and take out as many of the top end of that range as possible, because then you still have a lot of arms and legs at the bottom of that list, right?
Yep.
So underwriters is a great example. You pay signing bonuses and you pay high salaries for underwriters, but when the market collapses, the first ones to go are going to be your highest paid resources typically. So let's talk now about kind of the solution that you're bringing to market and how that's kind of connecting the dots for both the employer and the employee.
Yeah, so you led with it, but it's called the Mortgage Career Exchange, and what we're really trying to do is build a platform that is a community centered around mortgage, and long term we'll expand outside of that a little bit, but it's really going to be centralized in mortgage. And the idea is that it's going to be a place where a mortgage professional, individual person can sign up. They can submit their resume, name, email, very easy to sign up, and they'll be on this platform. Their resume will be in our database. They'll be able to see job postings. We'll have monthly networking and recruiting events that they can participate in. They'll also have access to some premium products like resume coaching, LinkedIn profile cleanup, and access to some Mortgage Bankers Association courses in areas like servicing, compliance, and underwriting production. And all of it is going to be centered on getting them ready for that next role. What can I do to prepare myself for the next role so that when that job posting does come out and I'm, competing with another 500 applicants, I can put my best foot forward. On the flip side, we'll have, companies will be able to sign up, mortgage companies, and, ancillary companies in similar industries can sign up to the platform. They'll be able to post their jobs on the platform. They'll participate in these networking events. We'll have what's called a talent showcase, where they'll actually be able to see some of these mortgage professionals that, hey, Brian just completed the level 1 course package for the CRU. Here's his profile. It's anonymous on day one, unless you want your profile to be seen. Here's his profile. Is this someone that you're interested in talking to? And, we think by doing it this way and really building it around mortgage, that it's going to be a much more efficient way for, these companies and people to connect. A couple of other just kind of small side benefits for the companies that are on the platform. They'll also have some limited access to some of the coursework through the Mortgage Bankers Association for their employees, which, always great to continue to develop in your people and invest in your people. And then, if the worst case happens and you're on the platform as a company and you do need to do some of those cuts, there'll be some bulk discounts if they want to sign their people up onto the platform. To do the right thing, set them up for success for their next opportunity. Obviously, if your company's on the platform, you're probably a believer in what we're doing, and you know that there's other good companies on the platform. So we're just trying to, smooth it out a little bit. Again, it's always going to be peaks and valleys, but if we can make the peaks a little bit lower and the valleys a little bit higher, we think it'll be better for everybody. Yeah,
I'm just, observing. I guess observing the carnage from outside the direct industry in the role that I play today, and having been inside of it for the better part of 28 years, it does feel disjointed. It feels like there's a massive disconnect when we go through these cycles. And when you and I first kind of touched base and talked about what you're doing, I think I immediately got the use case, and I could see the benefit on both sides of the equation. Something you just said that I hadn't thought about prior was, if I'm on your platform and I have to, do some kind of a reduction, so many companies aren't doing enough to help the folks that frankly carried them when they had more business than they could handle. And I think having the ability to connect, your team, the team that you have to cut into a resource like yours is super, super helpful. There's a lot of compassion around that. It's ultimately good for our industry as well to keep talented people in our industry and not lose them to other industries.
Exactly. Yeah. And I think, you'll see that periodically where a company will get some good press on LinkedIn or some article about, they created a little mini website for all the people that they had to, let go of, but it's very rare. And especially in our world where, again, right, wrong, or indifferent, it happens a lot when rates rise and things contract. It's just the right thing to do. And to your point, especially knowing that those are probably the same people that were working overtime, working weekends, helping you make hit your numbers when rates were in the twos. It's just the right thing to do. So we think that's something that a lot of the companies on our platform are really gonna enjoy. Again, hopefully we don't have to see a bunch of cuts, but the reality is it'll probably happen here and there, and we want to make sure that we can do the best to give people a soft landing.
Yeah, and if I were to put myself back into kind of my prior life, running a production channel, a production shop, you and I both know we're going to see, some movement in rates probably to the downward side at some point in the next, 18, 24 months. Not that today's call is not to predict, and we'll leave that to the Barry Habibs out there. They're much better at that, I think, certainly than I am. But it's going to happen. We're going to have some windows, and people are going to be looking to bring on resources to kind of take advantage of that. And I think what you're building or what you built, frankly, is a part of that solution. Is how do I plug in and have immediate access to talented people that can help us through these cycles. What's been the market reaction so far with what you're doing?
Honestly, a lot of it's been very similar to what kind of your reaction. I think a lot of people have said, you're right. The status quo is broken. Hadn't really ever thought about it. It's just what I'm used to. But love what you're doing and think it's something that makes a lot of sense. And excited to see it, get to scale. I mean, the thing, we've been talking, we're really officially launching here probably later this quarter. And the big thing for us is we don't want to build something that's one-sided. And today it doesn't do us any good to sign up, 40,000 mortgage professionals onto an exchange that doesn't have any jobs or companies. And, what are you really solving? So, the key for us, and the thing that we've been talking a lot about, is how do we get to scale? How do we get a critical mass of companies onto the platform so that we have a lot of jobs available for the people that are looking for those jobs, and then the cream will rise to the top, and those people will be able to get jobs. But in general, I think a lot of people have really, really liked the concept, and they're excited to get involved and help. And ultimately, this supports the community. It's even if you don't need to hire today, hiring is not a flash in the pan type of event. Again, some people approach it that way, but it's not. I mean, it's really about building relationships and building your brand and people understanding what your company is all about. And you can't just turn it on and off if you want to do it the right way and get good people. So we think this platform is going to be a really good way for those types of companies to get out in front of our industry and our community and set themselves up to get the right people. Because even in the last couple of weeks, there's been a little bit of a rate dip, and you start to see some job postings. Hey, this small little bank is hiring one mortgage underwriter. This bank over here is hiring one, loan processor. And to your point, it'll be exponential as rates, if rates continue to drop. But the work really needs to be done today to set yourself up if you want to get the right people.
Well, that's so important. It's both sides of it. It's the, staffing up, and again, the other side of that. You can't just, come in one day and say, we're going to start focusing on this. It's building a strategy. It's partnering with platforms like yours to have kind of this, evergreen approach to people management. Really, it's if you have a pipeline, a connectivity to your platform, people are still going to retire, leave the workforce, go to another employer, and so you just have natural attrition that still happens. Just like we talked about purchases versus refis impacting the overall business, you still have things that just happen in people's lives. So I don't think it's necessarily solely dependent on volume as much as it's a good business practice, a good partnering with good platforms like yours, just for this evergreen kind of approach.
Yeah, it's a great point.
Anything else you want to add before we kind of wrap up? I know we talked about kind of timing this so that we kind of talk about this in conjunction with the Mortgage Bankers Association participation, the advocacy conference. So I know a lot of people are going to be at that event. I think that's the perfect place for your product to have, a lot of exposure. Anything else you'd like to add? Just kind of highlight.
No, yeah. I think we've got all these pieces together. Actually, for all intents and purposes, we're basically live today. We're just kind of putting the final touches on making it a real platform and exchange. But we're effectively live today. We've got companies signing up today, and again, the biggest thing for us is we just want to get the engagement from the companies in our industry that want to participate and support the community, and really, really view the value in having good people at their company and in our industry and making sure that they're taken care of. So, our big focus right now is just getting companies onto the platform, and anyone that wants to get onto the platform, we'd love to talk to you, tell you more details, and see what we can do to get you onto the platform.
Well, this has been super helpful for me. I understand more clear. It's more clear to me, the value prop. I love it. I think it's, if I was still in my prior seat, I definitely would be signing up at my company and my team. So I appreciate, Mo, what you're doing. It is important for our industry to kind of have this sustainability, and your platform is going to support that. So thank you for bringing this to the market. Thanks for sharing your story here on our podcast. And we'll include links in the as we post this. So if people want to get in touch with Mo, you'll have all his information connected to this podcast post. You're also on LinkedIn, so I know you're out there as well. So anything else before we close out, Mo?
No, this was really appreciate you having me on, and really excited to get this thing launched, and look forward to talking to everybody.
Well, thanks for coming on, and everybody, thanks for joining this episode. Come back next Friday for our next episode of FinTech Fridays. Thank you.
Thanks.